Hello, bankers. A very good evening to all of you. Welcome back. I hope I'm clearly audible and visible to all of you. So, quickly join in so we can start our today's discussion, right? This is the final session about the concept classes. Module D, I'll provide you in recording because we have to practice module wise MCQs. So, tomorrow onwards, regular 10 p.m. we will be discussing our module wise case studies and application based question, and I'll try tomorrow or day after tomorrow I'll be sharing that module D concept summary along with the notes itself, right? So a very good evening to everyone, guys. I hope you guys are doing well with your exam preparation. So in this particular session, basically we are going to discuss the concept summary. If you have already watched that, if you are comfortable in Hindi language or bilingual, so I have already done concept summary plus two different set of unit wise MCQs. So you can stick to those particular one. ठीक है? You do not like आपको additionally इस पर time देने की जरूरत नहीं है. But if you are only comfortable in English language, so that's why I'm doing these particular session. There are so many candidates who all are only comfortable in English language itself. Okay? So I'll be providing you a quick summary around all the modules. Module A and Module D we have already done. So today we will be discussing around the Module C, right? And Module C, which is all about treasury management, and D, balance sheet management. So D, I'll be providing in recording, and from tomorrow onwards at 10 p.m. we will be discussing our module B, then module C and D. Then we have to take one another class on case studies and numericals only, and one final revision, right? And I'll be providing you module wise mock. Yesterday's performance was very poor. Only one candidate who able to score 53. Rest all are like 33, 36. There are some candidates who join and they did not attempt it after seeing watching some questions and all. I don't know what went wrong. So please do participate in those module mock. They will be the kind of game changer. You can attempt n number of time, ठीक है? And जिससे थोड़ा बहुत आप लोगों के कॉन्सेप्ट बन जाएंगे, ठीक है? पूजिशा मैम, we have Karan sir, Gyanendra sir, and Rukmani ma'am. Very good evening to all of you guys. So today I'm going to summarize module C. When it comes to module C, it is all about the treasury management. Now a few things will get repeated, so we will be avoiding those particular areas. Okay. Introduction to treasury management, which is all about integrated treasury management. Okay. Treasury products. So now when we talk about the integration of treasury, it is integration of Forex market, your money market, and securities market. Okay, that means you already know about the money market or instruments and all, and that in the topic, this treasury product is very important one. Last year there was so many questions around this particular one. Okay. International equity and debt product. Then we have funding and regulatory aspect, treasury management, derivative product. For this one I have done one video for 1 hour 30 minutes, so just take references of that particular one. And in detail basically, treasury asset and liability management, this is the next one आपका, ठीक है? A very good evening to everyone, guys. Yes, हाँ, ठीक है everyone. Test कब तक valid है? Who is asking this question? अच्छा, somebody is asking on application. Komal ma'am is asking on application. It is valid till tomorrow 10 p.m. only, ठीक है? Because tomorrow 10 p.m. you will get one another module mock for your module B itself, right? चलो, तो शिव साई and Visi, very good evening. Mahesh Sir, very good evening. चलो, तो guys, we will start with the introduction of treasury management, or the majorly basically the concept is integrated treasury, process of globalization, evolving role of treasury in profit center as a profit center, organization for treasury. That means that front office, mid office, and back office, right? I hope everybody know about the treasury things. Right? So treasury management, which is again nowadays is very important one for the to maintain the overall profitability for the bank itself. And integrated treasury is something like we have interlink among these different financial markets, like money market, capital market, or debt market and all, okay, or forex market. So let's say if we have any arbitrage opportunity, or else if we have to go for any sort of hedging and all, we generally use treasury management. There are some banks, they have treasury as a most of the public sector bank, they generally treat treasury as a department business. But there are some organizations, especially foreign banks and some private banks, they generally have a separate branch for the treasury itself, right? So that generally comes under this one. So treasury function was confined with the management of and maintaining of adequate cash balances to meet day-to-day requirement. That means liquidity management is done by this one, and even the management of CRR and SLR is also taken care by the treasury management itself. Deploying surplus fund generated from the operations and sourcing funds to bridge the occasional gap in cash flows or any sort of liquidity or ALM mismatch. Let's say if we have surplus money, let's say our receivable is scheduled for first and our payable are on 15, so we have that money for 14 days. So what treasury department generally do, they generally invest those particular amounts in the different securities, like they use call money or the money markets instruments or the securities market instrument or the forex market instrument. So for 14 days we do have some sort of opportunity cost which opportunity cost with that particular money. So we generally that they generally using that particular money for the overall profit maximization. And sometimes we have vice versa cases, like let's say our schedule payment is for first and your receivables, there are some delays and all, and that is for the 14. So like there is a gap of 14 days. So what we will do, we'll borrow money from the money market or we'll use some other market money, the money things, and we generally use that particular one for the fund management and all. Okay? So that these entire things are generally taken care by the treasury, and that generally comes under the आपका integrated treasury itself. Okay? So integrated treasury in banking setup refer to integration of money market, means when you'll come to the money market, treasury products, so they include money market product like call money, notice, term money, or the other instruments of money market like LAF and others. Okay? So we have securities market, that means आपका debt market and the capital market. Okay? So equities and debt both. Foreign exchange आपका forex operation. So there is a sync between all these or among these different markets. So basically what we are doing, we are raising money from one market and we are lending in another market for the to increase the overall profitability for the bank, or even like we can say to help bank to generate more and more profit in this particular case as well. So that is generally comes under from this one. So these are some major driving forces for treasury management, integrated cash management, like as I gave you an example of ALM gap and all. Interest arbitrage, if we do have some sort of arbitrage opportunities to encash those particular one for the to maximize the profitability of bank. Access global resources आपका ठीक है, making position in forex, or as well as to facilitate our clients or even as a proprietary position. Corporate demands for high-end services. Risk management, this is again a very primary function. Meeting reserve requirement like CRR and SLR. Global cash management on behalf of bank, and efficient merchant services, which include foreign exchange and advisory services. So these are some core areas or core functions which generally get performed by the your treasury departments in the bank. Okay, Mahesh sir, very good evening. So if it comes to the integration, so we have integration of forward forex market, money market, securities market. Apart from this, risk management is a core function, and assisting bank in managing asset liability mismatch. Okay? So these are the core functions which generally get performed by the treasury departments, and they generally manage these particular things with the help of integration itself. Okay? So they generally integration, I hope you understood the meaning of an integration, how it generally work. So if it comes to the core function, if you summarize all these functions, so these are the three core functions. One is liquidity management, another one is proprietary position, and third one is आपका risk management. Okay? So liquidity management, as I gave you an example of ALM, asset liability mismatch. If there is any आपका mismatch it is positive side और आपका negative side, ठीक है. If it is negative side means your payable schedules before then your receivables, ठीक है. So वहाँ पे हम इसको use करेंगे. और positive side is like, let's say your payable on 15th and your receivables are on 1st. So we have 14 days, so we can utilize that particular money and we can generate some sort of interest. Proprietary position means bank owned position in the derivatives or equity, forex or any other market आपका, ठीक है. And risk management आपका, where we generally do some sort of hedging or to manage liquidity risk, to manage market risk, or the different type of risk, they generally get managed through this particular one. Correct है. Jagruti ma'am, today's session is basically a concept summary class. From tomorrow onwards, we will be practicing module wise. Again, module A we have already done. Module B we will do tomorrow. Okay, and from tomorrow onwards, only we'll do live session for the case studies and MCQs, module wise revision. Okay, there are I have, if you are comfortable in Hindi and bilingual, so I have already provided you detailed summary session for all the 4 modules, so you can watch those particular one along with 2 different set of questions. Okay, there are few people, those who are only comfortable in English language, so we are doing this revision. Module A and B is already done. C we are doing today, and D I will be providing one recording session because now we do not have that much of time. So we will be doing maximum things around the case studies, आपका application based question and others, that module revision similar to this which we have done, that is module A आपका, ठीक है. संतोष sir, very good evening. चलो, so Jagruti ma'am, you got your answer, ठीक है. So if you are comfortable in Hindi language or bilingual itself, ठीक है, so I'll highly recommend the previous sessions. Previous means which I have uploaded 2 months or 3 months ago. ठीक है, you can stick to those particular one, and let's say, or else if you are following that BFM restart series also, and if you have done that particular series, that is more than sufficient. So I'll not suggest कि आप यहाँ पे भी इसको भी देखो and others. No, that is not required. ठीक है, आप उस पे रहिए, or you can practice mock. One mock 100 question is already there, and one another mock आपका mixed set of question, that is also there, and one another mock for module A is all 3 mocks. They are live, okay, so you can practice or you can revise through those particular one. So globalization, okay, the another aspect आपका. Now see, the role or the importance of this treasury got increased due to globalization. Globalization, interaction of, like nowadays, individuals as well as corporate houses, they have some sort of global aspirations. They do trades आपका, or they do like deals in the foreign countries or the foreign currencies. So that increase the role, or that increase or enhance the role of our treasury departments. That if we are doing some sort of cross-border transactions, or we are dealing in multiple currencies and also, so there is involvement of treasury, and even there are number of people or investors, they generally use आपका they used to do that forex trading and all, so we generally facilitate those particular one with this particular one. ठीक है, that is 10 PM only. ठीक है, from tomorrow onwards every day 10 PM आपका MCQs and case studies marathon. Ma'am, you can see the schedule also, I have already uploaded. ठीक है, so globalization, which refer interaction between domestic and this, we all know. ठीक है, portfolio investment, these are the key factors who generally involve treasury in that particular, where bank treasury is involved. Okay. Foreign investor investing in domestic equity and debt market, direct investment like FDI and others, they are generally part of this particular one. External commercial borrowings are done by the Indian companies. Issue of equity and debt in global market like ADR, GDR, IDR and all. Okay. Mergers and acquisitions आपका, ठीक है, involving domestic and foreign entities, and payment for technology transfer, royalties, financial services, etc. So these are some like kind of outcome of the globalization, and these things or like these transactions directly or indirectly managed by the treasury itself. So that is generally part of this particular one. Okay. So globalization of treasury, when it comes to the globalization of treasury, okay, so the treasury, sorry, it should be organization of treasury, my bad. Okay. So we have discussed earlier also. Okay. So we have 3 areas आपका. One is आपका dealing room, which is front office, and another one is back office, and third one is आपका mid office. ठीक है, so it should be आपका like this 1, 2 and 3. ठीक है, so front office, which is which is generally responsible for the deal executions and all, or trade execution and all. Mid office, which is generally responsible for MIS and risk management, and back office is generally responsible for the overall administration, as the core function is settlements or one-to-one settlements, or settlements means आपका like reconciliation settlements. These are generally the work or the overall administration of the activities that is generally done by this particular one. Okay? Can we get a recorded marathon in my account? Girija, yes, in which account you are asking? Can you please explain me? I actually I'm not getting that particular one for this session or the for the previous one. If you are asking for the previous one, and if you are part of any course, आपका sir, so sorry, Girija sir, if you are asking for any course, I have already uploaded in that one. If you are asking specifically about this particular session, no worries. If you are going for this year, I can update this particular one. No issues with that particular one. Just please do mention about the course and all. So I'll be able to find out that particular one, and I'll be able to upload that particular one also. Okay. So I hope everybody knows about these particular one. So dealing, there are some question around this one. Okay. You can expect half marks or 1 marks question based on this particular one also. Okay. So the role and responsibilities of different offices in our treasury management. Okay. Yeah, any doubt on this particular one? I guess this we have discussed earlier also in detail, the role and responsibilities in others. So this is the entire dealing room framework. We have chief risk officer, and we have general manager, CTO. We have chief dealers for the different one. Okay. So we have money market, forex, and securities, and their responsibilities. This is all about your very first unit. Okay. So unit 19, which is all about the introduction to treasury management. Then we have treasury products. The another one. Last year there was number of questions. Usually we take this particular topic bit lightly, because reason is, I'll tell you the reason. When it comes to the treasury products, it include forex, that you have discussed in detail. We have discussed this particular one in detail. We have practiced number of questions around this particular one. So then another one is money market and securities market and domestic and global market, means area, GDR, idea. Okay. So money market product like call money, notice money, term money. We have commercial paper, we have certificate of deposit, we have treasury bills, we have LAF, liquidity adjustment facilities and all. But I'll recommend this particular one. I know कि everyone know around these particular things. यहाँ especially this money market, you know everything about the money market tools and all. But once practice this particular one, because like when I'll come up with the module C revision also, I'll be including 10 to 12 question around these particular one, statement based and all. So you will be able to recall things. You know things very well, but sometime what happened now, when we have exam pressure and also we do silly mistake, and also please do avoid those areas. Securities market means आपका capital market and debt market, your equity market and bond market. So equity, they have given some areas like type of equities. There is no book building process is part, that is not part of your curriculum. But the type of equity, the type of shares, equity and preference, and even they have explained the different type of preference shares also, like convertible, non-convertible, redeemable, irredeemable. We have convert आपका participative, non-participative, and one more आपका, ठीक है, that is redeemable, irredeemable, convertible, participative, and one more type is there. Okay. Overall 8 kind of areas can be part of this particular one. ADR, GDR, IDR, again these are the part of this particular one. Okay. So we will be discussing all these particular one. All right guys. हाँ ठीक है, तो आगे बढ़े. ठीक है. So treasury we will be discussing very lightly, because these are the instruments and you know those particular areas very well. Everyone know. If you are having any doubt, please do let me know. I'll try to explain that particular one. So treasury management, we generally know nowadays treasury, that's generally known as integrated treasury. So we have integration of all these market. So we have integration of all these market, basically forex, money, आपका debt and equity, share market and bond market means, and आपका the GDR, ADR and IDR वाला thing. So there is an integration of these many market, and that almost cover the entire financial market, right? So treasury function was confined to fund management, maintaining adequate cash balances, this that we have discussed earlier also. Product of like the first market is Forex market. So product differentiation is based on spot and the forward. Okay? So spot means that value date wala concept where the settlement where trade gets settled within T plus 2 working days, and forward is आपका where trade gets settled in आपका any day after the spot date and all. Okay? So currencies, like see spot market आपका ठीक है. So currencies are mostly bought and sold in spot rate. The spot rate refer to the payment and receipt of the respective currency. Settlement take place in 2 working days from the date of trade आपका ठीक है. So this is the very first market आपका where we have cash already, or we have आपका term, and we have आपका spot. ठीक है. The another one is forward market. ठीक है. Forward market where generally currencies or the trade which generally gets settled in the future date, any date after the spot date. Okay? Usually these are the swap contract between a bank and some institutions or some exporters, or we have forward contract between bank and some other exporters or other companies. We have sometimes we entered into the future contract as a bank proprietary position to hedge our existing portfolios and all. That generally comes under this particular one. Okay? So there is no, I guess there is no issue around these particular thing, because we have already discussed our forex business, and like even they are also part of the derivative things and all. Okay? So if you are having any doubt, please do let me know, guys. So I'll try to explain that particular one. Swap also, that is generally part of this. Okay? So swap means yesterday only I discussed this particular one. Okay? So it is exchange of आपका fixed versus floating. आपका anyone having any doubt, please do let me know, guys. So money market, हाँ. So now when it comes to the money market, na, so we all know the instruments, but these instruments, okay, like call money, notice money, term money, interbank transactions, their limits आपका. Okay? That limit वाला portion is very important, and I have kept this particular one. Okay? So call money, notice money, term money. Call money overnight. These are the interbank transactions. Interbank means bank to bank transactions. ठीक है. Call money is generally for overnight, and notice money 2 to 14 days, and term money आपका more than 14 days to up to 1 year. Okay? Now, how much basically a bank they can borrow through these particular one. So these are the limits. Okay? This is very important one, and there can be one case study around this particular topic. ठीक है. तो ये portion थोड़ा सा important है. आपका participant category and prudential limits आपका. ठीक है. तो prudential limit are very 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 important. So please do take care around these one. Like scheduled commercial bank, excluding small finance bank, they can call and notice money. They can take 100% of their capital funds on daily average basis to the reporting fortnight, and 125% of capital funds on any given day. Okay? That means like any given day, it can be, let's say random day आपका, let's say 1st to 14, any given day on 5th, it can be 125%, but once they'll report this particular one, so at time it should be on an average आपका 100% of their capital funds आपका. So that let's say if their capital funds are 100 crore rupees, that means they can borrow maximum up to 100 crore rupees on an average on the basis of this call money and notice money. Okay? In case of term money, it is where we required internal board approval limits within the prudential limits for the interbank liabilities. In case of payment and payment and regional rural banks, call notice and term money, 100% of capital funds on daily average and 125%. See, it include call and notice, and term money is आपका as per the board approval policy. But in case of payment and regional rural banks, it is 100% on a daily average basis reporting fortnight, and 125% on a given day. So it cannot beyond the 125% on a given day. That means cooperative banks आपका call notice term 2% of aggregate deposit as at the end of previous financial year, that generally get calculated based on this. Primary dealers call and notice money 225% of net owned funds as at the end of the previous financial year. on daily basis. Term money 225% on net own funds. ठीक है? So net own funds at the end of the previous financial year. So please do try to remember these particular one. थोड़ा सा इनको याद रखने की कोशिश कीजिएगा, and they'll help you to solve. Once we'll do the module C case studies na, we'll be having one case study or two case study around these particular one, and they get asked so many times. So please do take care around this particular things. All right, chalo. So domestic market and global market. So where we have investment like आपका FIIs, ठीक है, foreign investments, आपका foreign investment in the term of FII and FDIs आपका, ठीक है. So foreign investment flow, direct investment आपका generally for FDI, and portfolio investment आपका in the investment in the stock markets and all. I hope you remember the limits, ठीक है. So 10%, less than 10% आपका FII, and 10% in above आपका FDI, ठीक है. So once in FDI, always in FDI, that module E. That's why I always used to say कि module A and B, if you spend more and more time on those particular one during your preparation, you will get these particular thing easy. Now, like if you, let's say if you start with the treasury management, you will study these particular thing in depth आपका. They have given the same content which is part of your module A itself, ठीक है. ADR, GDR and IDR, these also we have discussed. ADR and GDR by Indian companies in foreign market आपका, ADR specifically in NYSE, ठीक है. And GDR आपका generally आपका Luxembourg stock exchange from Europe, they get registered. Basically Indian companies, they are issuing depository receipt abroad, and they are raising funds from outside India, and they are the foreign investors, they are generally investing in Indian companies. Screenshot we will take this one. Definitely you can ma'am take it. And Rukmini ma'am, I'll share this particular PDF just after this session on app as well as on Telegram. So wherever you are comfortable, just keep these particular document handy, and I'm preparing one another documents. So with these kind of information, with those kind of information, so there are some specific areas which from where you will see the application and case studies based question and all. So I'll providing you that particular, but still you can also keep these kind of things with you, right? So then we have ECB, आपका external commercial borrowing. This we have discussed as a entire or as a whole unit आपका, and we practice a lot of question around this particular one also, ठीक है. So if you guys having any doubt, any queries, please do let me know in the comment section, ठीक है. Foreign currency funds of bank, ठीक है. Bank can use FCNR, deposits funds for investment in overseas market as well as for domestic lending in foreign currency. They are also permitted to borrowers to borrow or invest in overseas market within a ceiling limits of 100% of unimpaired tier 1 capital and minimum 10 million US dollar, subject to guidelines by RBI. Bank generally use this facility to extend short-term loans, usually up to 6 month rollovers and all, to the different parties. Special facilities to the exporters. That is something which is aapka like pre-shipment and post-shipment related loans and all. They generally comes under this particular area. Free remittances. That is for that particular one we have LRS. So free remittances, it is aapka. It should be LRS only. 250,000 US dollar and all, and this is all generally comes under your LRS scheme, and LRS we have discussed in detail as well, right? So please do take care around these things. Investment securities आपका, ठीक है. So if it comes to the securities market, so we have two major categorization. One is around the equities, another one is around the debt. Debt means आपका bond market, ठीक है. So equities we have shares market, where we have the two major areas. One is your equity shares or common shares, another one is preference shares, and the another side debt. When it comes to debt or debentures and all, so majorly through the debt we generally raise the funds and all, that generally comes under that particular one. So we'll directly jump to those particular one. Corporate debt papers, whenever any company is issuing any sort of bonds, we'll be requiring these rating agencies approvals and all, and RBI, they have approved these particular one. They are get registered under SEBI and all. Debentures and bond. The difference between debenture and bonds is mentioned here. Debenture are basically, these are with collaterals. So whenever a company issue debenture, they are kind of a debt. They are kind of a bond. Sorry. So like they have a fixed rate of returns and everything. but they are with collaterals. Okay? In general, or the fundamentally their definition is around the they whenever the companies issue debenture, they provide some sort of collaterals. Okay? They are secured instrument. But when they issue the bonds, they do not provide any sort of security. So that is the difference between debenture and bonds, fundamental differences. But nowadays, when you'll see the practical life now, there are a number of companies who is issuing debenture without collateral also, or a very less margin as the collateral is itself. Okay? So that generally comes under this particular one. Correct? है? So equity, we have आपका with voting right and with differential right as dividend and all. Okay? So preference shares, the another type of shares which where there are some investors, those who are the preference shareholders, they get preferred over the equity shareholders, right? So they get preferred over the equity shareholders. That means they have preference of dividend, they have preference at the time of liquidations over the equity shares, right? Nitin sir, you can go with this particular one. Okay? If you'll search on Telegram now, okay? JIB CIB prep official, if you'll search with this name now, आपका @JIB CIB prep official, so you'll get this particular one. Okay? And even in the description box also, you'll get the link as well. Correct है दोस्तों? Any doubt on this? So in case of preference shares, we have different types: cumulative, non-cumulatives, redeemable, irredeemable, participative, non-participative, and convertible and non-convertible. Okay? Any doubt around these particular one? Cumulative, basically, if investor may have missed dividend in the past, so whenever company will issue dividend, they'll provide the dividend for the past year also. Okay? As I'll give you an example for this one. Okay? So you can quickly build your understanding around this particular topic. So we have cumulative and non-cumulative. In case of cumulative, let's say there is a XYZ company, okay? They have come up with they have missed dividend in 2022-23. They did not provide any dividend during this period. Okay? 2023-24, again they did not after declared the dividend. In 2024-25, they issued dividends. So now we have two types. One is cumulative, another one is non-cumulative. Cumulative numbers. So cumulative years or interest. Okay? So it is something when this company will issue dividend in 2025, they'll, if your preference share is cumulative preference shares, you will get dividend from these 2 years also. Okay? If it is non-cumulative, you will get dividend for only this year. Okay? That is the one. Another one is participating and non-participating. When it comes to the participating and non-participating, let's say this XYZ company, they come up with a dividend, where they are giving one preference shares for 1000 rupees initially आपका. Now they have they are making some sort of commitments कि whatever profit we will earn, we will distribute 8% as a dividend. Let's say if their profit is 1 crore, so out of 1 crore, 8% they'll distribute among these particular preference shareholders. Now they added some sort of conditions कि if you pay us 200 rupees additional per share, this is kind of a rider in insurance sector. So if you pay 200 rupees additional per share as of now, and if our profit is more than 5 crore rupees, we will pay you additional 2% of dividend. So now we have two options as an investor. One is you can enter simply in this particular case, you will be known as non-participating. And there is some another investor called X who entered entire in this particular deal. He's right now he's paying 1200 rupees for one preference shares. And if company earn more than 5 crore rupees as a profit, so there will be their dividends amount for this particular one will be आपका 10%. The additional 2% they'll get after that particular one. So that is something that generally comes under this particular one. Okay. So this was, and when it comes to the convertible, this right belongs to the investors. They can convert those type of preference share after a certain time into equity, and they can liquidate. And when it comes to the redeemable, right belongs to the issuing company. They can redeem means buy back those particular shares from the market, and they can they can pay off the money of the investors and all. So that is something around the right and all. So this unit now, unit 20, again I'm saying this is very important one, but we all know the basics around these particular basic like whatever we required. We all know what is treasury bill, what is commercial paper, LAF and others. So those are the some areas of that particular one. And with the help of practice, and a basic understanding. I have shared another documents yesterday also. Okay. So if you want to see the in detail of those particular products and all, you can go through that particular one. Correct? Now I do this time. How would be the paper gap is to now to say that is good, na. So that's why people are getting time to prepare for the concept things and others also. Otherwise, people used to give up after a certain time. Like after watching module A, they are like कि अब जो भी होगा आपको भगवान भरोसे देख लेंगे वाला, ठीक है. So that is the kind of things. Unit number 21, international equity and debt product. So that include these many areas. ADR, see, if you study this particular topic, so we have आपका regulatory environment important, but we have GDR, IDR and ECB. In detail आपका. See now, these three things which we have already discussed in our module A. These three things आपका three product. Trade credit also we have discussed earlier also. And rupee denominated bonds आपका. So that is the new things which are generally part of this one. So that's why your A and B are very, very important. When once you'll come to the module D now, module D. So your module B learnings is going to help you in that particular case as well. All right, guys. Chalo. So regulatory environments when it comes to the, so we have FEMA guidelines and which is generally governed by the RBI. So foreign investment in India regulated in term of clause B of subclause 3, section 6 and 47 of FEMA 1999. So which is generally deals with this one. FDI, like when it comes to the foreign direct investment, so that investment in instruments like person resident outside India, an unlisted company, it can be any percentage, and aapka, if it is a listed company, so this is the requirement. 10% or more of the post issue of paid up equity capital on fully diluted basis of a listed Indian company. In case of FII, that is less than आपका less than 10%, that is the requirements. Investment by a person resident outside India is prohibited in following sectors. So these are the areas where FDI cannot be basically foreigners, they cannot make any sort of FDI investment, like lottery business including government, private lottery, online lotteries, gambling and betting, chit fund companies, nidhi companies, trades, TDRs, trading in transferable development right. It is something related to properties, investment and all. Manufacturing of cigar, cheroots, ciggy rolls and cigarettes, or of tobacco or tobacco substitute. The prohibition is on manufacturing of product mention and foreign investment in other activities relating to the product, including wholesale cash and carry, retail tradings under this one, activities sectors which are not open for the private sector, like atomic energy and railways and all. Okay, so these are the areas which generally prohibited under the your आपका FDI investment and all. Okay, this is something when it comes to the regulatory environment for foreign portfolio investment. If it comes to the FDI, FPI आपका, ठीक है, less than 10% of post issue or paid up capital on a fully diluted basis, or less than 10% of paid up value of each series of capital instruments of the listed Indian company. FPI is a person registered in accordance with the SEBI Portfolio Investors Regulation 2014 around the FIIs. So earlier one was the for the FDI 10% and above in case of a listed company on fully diluted basis. And one case is one situation that get asked so many times ki, let's say there is a company, there was a private company, not listed company, I mean. Yeah. So a foreigner who is having 7% stake in that particular company, later on that company get listed. So now the situation is, do that foreign investor need to increase their holding? It is not necessary. So once in FDI, always in FDI. That will be considered through that particular one. Still, if they are having 7% stake in that particular company, that will still consider as आपका FDI in that particular situation. ECB, this we have discussed in detail and we practice a number of questions. Unit 5, Unit 4 of your module A, I hope you guys can easily relate this particular one. So we'll not like these things which we have already discussed. That's why I was like we were focusing more and more time on this module B. That was the only reason. Okay? Like we have approval route and direct route and foreign currency ECB and INR ECB. And yesterday or day before that, we practiced a number of questions. This is something which is very, very important one for all of you. Okay? So like when it comes to the ECB in foreign currency and Indian rupee, okay? So description आपका currency are any freely convertible foreign currency, okay? Like USD, Australian dollar, euro, or आपका pound and all, as per RBI basically, and it is in Indian rupee. Instrument type, it can be in the form of like any Indian company, they can raise foreign currency denominated ECB in the form of your आपका bank loan. It can be floating fixed rate, it can be a bond or a trade credit beyond 3 years, आप FC foreign currency convertible bonds, and financial lease. In case of same, these are basically same. The only thing is currency is get changed. Eligible borrowers, all entities who all are eligible for the FDI. Okay? So they are further following the entities like Port Trust, Unit, SEG, आपका SIDB and Exempt. Okay? All entities eligible to raise foreign currency ECB. This registered entities engaged in microfinance activities. Registered not for profit companies and government NGO, आपका non-government organization. Recognize lenders who can lend money. So foreign institutionals, आपका like IMF or any other any individual or foreign institution after the your KCC, sorry, KYC and due diligence compliances and all. So they are eligible for this particular one. Minimum average maturity period is very, very important one. It can be asked in the form of case study or in case of the application question. And you have to remember all these particular one. And please do practice this particular one again and again as much as you can. So because this is definitely going to help you in your upcoming examination. One question at least you can expect based on this particular one. So like 1 year आपका, which is generally for the manufacturing companies up to 50 million US dollar, 50 million US dollar or equivalents from the foreign equity holders. This is the condition. In general, the minimum average maturity period is 3 years. The limit is 750 million US dollar. In case of startup, it is 3 years and the limit is 3 million US dollar. Okay? And capital purpose, general corporate purpose, repayment of rupee loan, ECB, is raised for working capital purpose or this again. So 5 years आपका, sorry, capital purpose, ECB raised from the foreign ECB, this is the B आपका, B start from here. ECB raised from foreign equity partners for these particular purposes 5 years, and working capital purpose it is आपका 10 years. That is the one. And then आपका on lendings by NBFCs, working capital purpose, general corporate purpose, repayment of rupee loan availed domestically for capital expenditure 7 years. And then on lendings by NBFC for same purpose, ECB raised for repayment of rupee loan 10 years. For purpose other than expenditure on lending NBFCs and all, again 10 years and all. So these are the areas. These classification, and we have discussed one question or two application based question around this particular in yesterday's class also. And once like I have done the like that, even in your mock test also there was 2-3 question around this particular one. So please do take care about this one. Okay. This time, okay. Nitin sir, what was your query? Actually, sorry, I missed your comment. Huh? Acha, okay. It is around the Naidu sir answer. Aapka, no, they won't increase the level. How much they'll increase the level? But what I am expecting from IIBF na, BFM it will be moderate level, but the next two paper aapka, especially ABFM and your BRBL. Now IIBF, like toward the BFM they have a like for all the subject of the CIB, they have some sort of mindset कि they are going to test all the conceptual part of the paper आपका, ठीक है. So it is completely application driven or case studies and numerical, ठीक है. And the only thing is, if you good in concept na, or if at least you have gone through the concept once na, you will be able to manage things and all. Okay? The concept is basically that is the key for this particular examination nowadays. Without concept, it is very tough. Then change of currency of borrowers. This was the previous one. So change of currency of ECB from one freely convertible currency to any other convertible foreign currency as well as INR is freely permitted. First thing. In case of change for change of currency from INR to any freely convertible foreign currency is not permitted. Okay? So see the difference. These are very. Yesterday we practiced one question around these particular things in from our module A itself. So if it is in foreign currency, you can easily convert that particular one into INR or any other freely convertible currency. But if it is in, if you have raised your क्या कहते हैं ECB in INR, so it is not permitted. You cannot convert that particular one in some other currencies and all. Okay? If that is the motive, you can directly raise funds in that particular one. Why we are raising funds in this particular one? So we can like sometime like that masala bond and also because they generally provide some sort of strength to the domestic currency. Otherwise, like if you are converting after raising that funds, there is no use of that particular one. Correct? Hai? चलो, so entities आपका these are the same which we have discussed in our module A itself, ठीक है. So you just please go through these one, ठीक है. GDR आपका now these are the areas, ठीक है. Sorry, GDR आपका global depository receipt to convert into specific number of equity shares and all, ठीक है. This also we have discussed. There is one point Indian IDR also. These are the subtopics which we have already discussed. Okay? So you can have one readings, and if you face any issue now, just take a screenshot of the page and just you can directly send me on the Telegram itself. Okay? So I'll definitely get back to you. So these are the prohibited areas, prohibited sectors. Sorry, ECB proceed cannot be utilized. Okay? So there is one point. Let's say if any company who is raising funds through the ECB, so they cannot use that particular money in these many businesses like real estate activities, investment in capital market, equity market, working capital. They can use this. We have discussed earlier also. Okay? Working capital purpose or आपका general corporate purpose or repayment of rupee loan. They cannot use these particular one, but they can if they have a foreign equity partners. If they have some foreign equity partners in their company, so these can be used for the general corporate purposes also, or these are repayment of rupee loan and others. Trade credits. So trade credits, when it comes to the trade credit, so here we have foreign currency denominated trade credits and INR denominated trade credits. So these are the two categories. So form a trade credit, form of trade credits, buyer credit and supplier credit. I hope you remember buyers and supplier credit. Buyer credit is something, it is as simple as a term loan taken by an importer from any Indian bank. Supplier credit is basically where for that particular transaction, the money is generally landed by the supplier's bank. Okay? So that is the supplier credit. Okay? So eligible borrowers, person resident in India acting as an importer, amount under the automatic route up to 150 million US dollar per import for oil, gas, refining, marketing, shipping and airline companies. For others up to 50 million US dollar or equivalents. For in general it is 50 million US dollar trade credit limit, but in case of आपका oil, gas, refining and marketing, airline and shipping companies, it is 150 million US dollar. Recognized lenders for supplier credit, suppliers of good located outside India. Buyers credit आपका bank, financial institutions or foreign equity holders located outside India and financial institution in IFSC. Period of trade credit आपका, ठीक है, the trade credit renew for the date of shipments shall be 3 years for import of capital goods. For import of capital good, it is 3 years. For non-capital goods, it is up to 1 year, और ऑपरेटिंग साइकिल विच एवर इज लेस, ठीक है. ऑपरेटिंग साइकिल इज 6 मंथ, इट इज आपका 6 मंथ ओनली. ऑल इन कॉस्ट आपका, ठीक है, सो इट इज 350 प्लस, यूजुअली इट इज 450 all in cost when it comes to the ECB, it is 450, but here it is 350, and in case of INR denominated it is आपका 250 basis plus आपका spread. Exchange rate, exchange of currency of foreign currency denominated trade credit into INR can be at exchange rate prevailing on the date of the agreement between parties concerned for such change, or at exchange rate which is less than the rate prevailing on the date of agreements. It is generally based on the parties itself. But in another case, आपका for conversion to rupee, exchange rate shall be rate prevailing on the date of settlement. Okay? That value date we will considering. Okay? Hedging provision आपका, the entities raising trade credit are required follow the guidelines for hedging, if any, issued by the concerned sectorial or prudential regulators in respect of the foreign currency exposures. In case of your INR denominator, the overseas investor are eligible to hedge their exposure in rupee through a permitted derivative product with authorized dealers, category 1 bank in India only. Okay? So these are some areas. Again, this is trade credit wala portion is also very important. It get asked many times, so please do remember those feature or statements आपका which is correct or incorrect area, so that will help you. Funding and regulatory aspect, if it comes to this particular one, the CRR and SLR and eligible securities for CRR and SLR or their NDTL calculation, that is very important. LAF आपका, when we talk about the LAF, so it include your majorly repo rate, reverse repo rate, SDF, bank rate and all. This generally comes under this particular one. Payment and settlement, again we have NPCI or Payment and Settlement System Act 2007 or NPCI products and dealings, they generally comes under this one. So please quickly go through this one. And guys, module D, I'll be providing you in recorded form. Those who are only comfortable in English, those who are comfortable in Hindi, so I have done already module C and module D. They are already available. Please do watch those particular one. They are in more detail because that time I got much time. And the best way is you can watch through the BFM Restart series. All 31 units are there. If you go through that particular one, and if you are following the regular marathon session for case studies and application based question, and if you are practicing mock, you are at safer side. I'll never commit ki you will able to score 80, 90. No, my goal is just pass this particular examination, and that is our goal basically. That's why I never entertain DVF candidate and all, because they have a different goal. They are preparing for some examination, they want to learn things and all. Our goal is just pass these particular examination and we can avail the benefits and we can build the concepts and all. So the required areas, so where we can relate, because we do have a time crunches, right? तो आगे बढ़ते हैं. CRR and SLR, ठीक है, CRR, SLR, ठीक है, we all know about these particular ones. CRR is we need to maintain with RBI in the form of cash, and RBI does not pay any interest on this one. And SLR is basically bank need to maintain a certain portion of their NDTL in the form of cash, gold and approved securities. Basically these approved securities are government securities. Now when it comes to the NDTL, okay, so while we compute the NDTL, there are few securities which get excluded from the computation of NDTL, that you have to remember. Okay? There must be a list. Okay? Main component of DTL, demand and time liabilities. Okay? So demand deposit held in current and saving accounts, margin money for LCs, overdue fixed deposit. Okay? So there is a question around a case study around the computation of DTL also, even in your book as well. So that is very important. Please take it seriously. Time deposit and fixed deposit, recurring deposit, reinvestment deposit, overseas borrowing, foreign outward remittances and transit, other demand and time liabilities like accrued interest, credit balances and suspense account. So while we calculate the demand and time liability, we have to consider around these particular areas. Okay? So they get added in that particular computation of NDTL. But when we calculate DTL for the maintenance of CRR and SLR, so there are some relaxations, okay, that you have to take care, right? So now this is the one thing. So scheduled commercial bank are exempted from maintaining CRR on the following liabilities. This is very, very important one. Okay? So this is the common one. Okay? General guidelines how you will compute your DTL, but this is something which is exempted one. ठीक है? So now these you have to remember. ठीक है? तो इनको थोड़ा सा आप लोगों को याद करना पड़ेगा. So liabilities to the banking system in India is as computed under the clause D of exemption to section 42 subsection 1 of RBI Act 1934, which include credit balances in ACU in dollars आपका, ठीक है, is in clearing union आपका, ठीक है, उसमें demand and time liabilities in respect of their offshore banking units, foreign branches आपका, ठीक है, the eligible amount, basically foreign branches, and you can also mention with you can also link the IBUs also, because IBUs are also considered as a foreign branches. Their balance sheet get maintained in foreign currency itself, right? The eligible amount of incremental FCNR and NRE deposit of maturing of 3 years and above from the base date of July 1st, July 26, 2013 and outstanding as on 7th March 2024 till their maturities or pre-withdrawals. Maximum of eligible credit and outstanding long-term bonds to finance infrastructure loan and affordable housing loan. Apart from this also we have some other areas. आपका जैसे paid up capital reserve, retain profit, refinance avail from RBI and apex financial institution like NABARD, SIDBI, Exim and all. Net income tax provision also, claim received from DICGC, Deposit Insurance and Credit Guarantee Corporation, and ECGC, ठीक है, Insurance Credit Guarantee Corporation, insurance company toward ad hoc settlements, court receivers and all. Okay? These are the areas which generally get exempted while you calculate the DTL for the maintenance of CRR. Liabilities arising on account of utilization of limit under banker acceptance policy. District Rural Development Agency, District Rural Development Agency, DRDA subsidy up to 10,000 kept in subsidy reserve fund account in the name of self-help groups. Subsidy released by NABARD under the investment subsidy scheme for construction, renovation, expansion of rural godowns. Okay? So these are like while we calculate or while we compute NDTL or DTL, so these get avoided. Okay? We do not have to include these particular one if any balances are related to these particular ones. So you have to avoid those particular one. We just have to consider these areas. Okay? They generally get calculated while we compute the DTL. So based on that particular only, you will be able to calculate the CRR. Okay? Whatever that amount, uska 4%, that will be the CRR liability on the bank. When it comes to the SLR, so these are the three securities: cash balances, gold, and approved securities. So they generally comes under, and bank they need to maintain these particular one with themselves. Okay? LAF आपका liquidity adjustment facility majorly through the credit policy or monetary policy, and RBI use this LAF tool आपका, these LAF tools to manage the overall liquidity in the Indian banking system or financial system. ठीक है, like in last two monetary policy they have cut down the repo rate by 1% or 100 basis point, 25 then 50 आपका day before yesterday. So basically what we are generally do, our target is inflation, balancing the growth, and the other side is आपका inflation and growth are the two major areas, and to deal with those particular situation. So to control the money supply in the economy, this is something which is a prompt tool which generally help RBI to manage this overall balance and all. This is very important one. and there are some tool like repo rate, reverse repo rate, bank rate, आपका SDF, standing deposit facility, which is kind of, which has generally replaced the reverse repo rate. Reverse repo rate still in system, but we, like nowadays most of the transaction that get happen through the SDF. Okay, so because the rate of interest which generally a bank get through the reverse repo rate is very low, but they get collaterals. Okay, but in case of SDF they get a higher rate of interest आपका, ठीक है, standing deposit facility, you know. I hope everybody is aware on these things. So yes, these are the very basic things. Payment and settlements, where we have RTGS, negotiated dealing system, NDS system आपका, which generally it's a kind of a auction platform for the government securities. We'll discuss this. Forex आपका, Forex clear, ठीक है, depository institutions, NSDL, CDSL, NEFT, RTGS, these are the very basic things. ठीक है. So when it comes to the NDS, that is negotiated dealing system, an electronic platform for facilitating dealing in the government securities and money market instruments. RBI introduced NDS in 2002 to order to achieve automatic, first one is automatic electronic reporting and settlement process, auction on electronic platform, and trading platform for trading platform for trading in government securities on a negotiated basis, telephone based trading आपका, as well as code driven आपका, ठीक है, like we have different softwares ना, like let's say when we trade through the Odin in BSC and all ना, that kind of softwares, ठीक है. So this is something, if bank want to participate in the auction of auction which is a money auction which is conducted by RBI, so they generally bid, they generally enter their bid through the NDS system, and the payment, and for the payment and settlement purpose we use RTGS amount. ठीक है, RTGS is the tool आपका for the overall payment things and all. ठीक है, so that is real time gross settlement and all. Forex clear is a forex dealing system developed by CCIL for the exchange transaction USD INR as well as cross currencies. CCIL is providing straight through processing for the USD INR, and CCIL as an intermediary settle interbank USD INR as well as a cross currency deal on net basis. Okay, it is something like, let's say in government currencies you are dealing with the NDS system, and FX clear आपका Forex clear, which is a similar kind of platform for the USD INR currency pair. Okay, so where you can purchase dollars or any you can enter into a cross currency deal as well. Depository institution, we have NSDL and CDSL, and participants like our bank and all. So they generally comes under this particular one. NEFT, RTGS, very easy one. Okay. Treasury risk management. Okay. When it comes to the treasury risk management, now market risk, आपका for market risk we use VAR and duration. Then we have supervision and control and derivatives. Okay. The uses of derivatives. Okay. So there are few things which will get repeated in this particular one. Okay. Supervision and control when it comes to this particular one. Okay. So see, once we trade in आपका, if you see the position or the trade amounts of the treasury ना, they are basically in bulk amount. Okay. And sometime what happened, we also get trapped. Okay. Like let's say if we entered, we have a open position in some trade and all. Open position means, let's say we have buy something but we haven't sell. So if the market, if we have buy means we are bullish about that particular security, and if there are some adverse movement in market, that can create some sort of issues for the treasury itself. Okay? They can face a liquidity risk, as well as they can lose a huge amount from the market itself. Okay? As we know, the trade values are a bit higher in this particular case. So for that one we have like that same thing, market आपका organization for market risk management. So that entire framework, board approval policy, and the risk management committee and others. So through the integrated that front office, mid office, and back office channels and all. Okay? So risk management is highly sensitive for to the security risk, as the risk arising out high leverage. High leverage means आपका, ठीक है, basically let's say we have a one position. Let's say we own the 100 crore rupees forex आपका. Let's say we own 100 crore rupees gold in our proprietary position. So based on that 100 crore rupees proprietary position in gold, you can execute a trade of 1000 crore rupees in the future or forward market, ठीक है, in future market especially, ठीक है, exchange driven market. So आपके पास 100 करोड़ रुपए का गोल्ड था आपके प्रोप्राइटरी पोजीशन में, और यू हैव सिक्योरिटीज ऑफ 100 crore rupees. By keeping them as a margin without investing a single rupee, you can own a portfolio up to 1000 crore rupees. Now, if something happened bad with that particular one, because these are subject to M2M, mark to market, you have to maintain that particular level of margin. Okay? So if something happened bad, aapka, there is one slight adverse movement can make a huge loss of 1 crore, 10 crore, 100 crore, and that kind of thing. So that is something which is like that is advantages you are having key by investing without investing a single rupee based on that existing portfolio. You are investing in 1000 crore rupees portfolio, but the disadvantage is something if there is adverse movement, if you are not following the stop losses or the other areas, that there can be one issue in that particular case also. Okay? So that is that you have to take care. Okay? So the high leverage the treasury business enjoy, okay? That is the benefit. The risk losing capital is much higher than say the credit business, okay? In the compared to the credit business. The bank capacity to extend loan is limited by the resources at its command, that is deposited and other borrowing. In case of the loan, the risk is limited to the principal and interest, but here you can lose आपका lost everything. Okay? There was one case now that was very interesting case from that there is one girl from Rajasthan or somewhere, that ICICI wali girl. Okay? I was like very surprised with that case. Okay? Like she has a real brain actually. Okay? So she was using the FD amount of the senior citizen only, those who have like they are not that much active in all. Okay? And she created a portfolio of 4-5 crore rupees and she lost in the market. The bad thing happened with her is the only bad thing happened with her is like that she lose the money. Otherwise, she was going in a very like the next scam for the country after. Okay? So she was like awesome. Okay? I was like reading that particular things, how she utilized the funds and all, and how she is deploying that money in the market and all, ठीक है, everything. So ऐसा brain चाहिए कुछ बढ़िया वाला एकदम ना, ठीक है. Like if she gain money from the market ना, after some time she will be becoming a news like new Harshad Mehta and others आपका, ठीक है. So bank RBI now look around those particular areas also. So concern for treasury आपका, ठीक है. See, this is explained here, ठीक है. Has a very low fund requirements. We call a high leverage. For instance, treasury can buy and sell exchange value of 100 crore without any direct investment. Okay? That means, let's say you have 10 crore rupees securities in your portfolio. By placing them, you can make a position of 100 crore rupees in others. So that is something around this particular one. Okay? But now, if adverse movement happen, at the same time, an adverse movement of the exchange rate by 1 may result a loss of 1 crore to the bank, which is a straight forward loss. Okay? There is no if and but. You have lost 1 crore rupees, that is gone, right? So that is on concern. So we need आपका organizational control, that organizational framework where we have stop losses or the entire organized chief dealers and others. Okay? Then we have exposure ceiling, stop losses, or the deal limits or day limits, week limits, open position limit and others. Okay? Limit on trading position and stop losses. So these are some areas which get suggested to deal with these one. Organization control. The organization control refer to a check and balances within the system. Treasury is basically divided into 3 areas. These are the front office, back office and mid office. Okay? And we do not have interferences between each other, right? Internal control आपका, ठीक है. So we'll be requiring position limit and stop losses. I hope everybody understood the stop losses things and all. ठीक है. The limit are imposed on dealers who trade in foreign exchange and securities. Trading in high areas vulnerable to sudden market fluctuation. Let's say we have buy something on 100 rupees and our loss bearing capacity, which is also known as risk appetite, is 2 rupee. That means your stop loss will be 98 rupees. If the adverse movement happen. So if it will trigger 98, you will be exit from that particular trade, and that trade will automatically get settled after like accounting 2 rupees loss for your company. Okay? And exposure limit is something, position limit आपका basically it is something, let's say we have deal wise कि while we put the deal we can have a maximum deal amount of this value, or it can be dealer wise also. Okay? As a chief dealers, you can like let's say we have in our branches also, no, a PO or assistant manager can give loan up to this amount, a branch manager can sanction up to this amount, regional manager they can sanction up to this amount. Similarly here also, right? So as a dealer you can have a maximum deal of this amount, you can have a maximum open position in a day of this amount, or your rollovers are, if you are, let's say carrying any position for the next trading day, so this is the limit, so you cannot breach that particular one, that generally comes under this particular one. Okay? So like we have a deal size limit on open position. Open position means, let's say we have purchased something today and we are carrying that position for the next trading day. So if you compare these like it is something intraday and delivery. Intraday is something we have buy today and we sell today. Okay? Intraday we have high exposure because the risk probability is low. But here when you are keeping open position and if you are carrying that particular position, so there is a probability of losses because within that closing period there can be any adverse situation and all. Okay? So you have to go with the stop losses and all. Okay? Stop loss that I have already explained you. So all limit are expressed in absolute amounts. Okay? So let's say if a person or dealer is working, so this is the exact number. We are not giving any percentage or anything else. We are just telling the number. This is your limit. You cannot go beyond this one. This is your open position limit. You cannot keep those particular transaction open for the next trading day and all. So that is something that's generally part of this particular one. Correct? है? आरती मैम very very good evening. चलो आगे बढ़ते हैं guys. Market risk, sorry, I have skipped one. Exposure ceiling, ठीक है. So exposure ceiling are kept in place to protect bank from credit risk or counterparty risk. Credit risk in treasury may be split into default risk and settlement risk. Default by the second party and settlement आपका that value date वाला things and all, ठीक है. Default is typically when bank lend in money market. Okay, it is something आपका the other side, ठीक है. The borrowers bank may fail repay the amount on their date. Similar risk in is there a repo transaction also. Okay? So when another party is not fulfilling their obligation. Market and credit risk. So these are the risks which we have discussed so many times. So I'll quickly summarize this one. So these all risks which we generally manage through the treasury. ठीक है? Currency, आपका VAR calculation, ठीक है? So VAR we generally value at risk आपका which we generally use to calculate the market risk. ठीक है? So we have basically आपका probability of not probability of default, that downside potentials, ठीक है? Or the confidence level 99%, 95% and others. ठीक है? This is very important. Please read this particular carefully. ठीक है? VAR is a statistical method which indicating worst possible movements of market rate. Let's say our portfolio size is 100 crore rupees, and what, like if you're calculating 1 day VAR means 24 hours. Okay? So what can be the worst scenario? What can be the worst negative side for this particular portfolio within 24 hours? If it is for 1 week or 1 month or 3 months and all. Okay? So VAR, which is a tool or a financial model which help us to know the worst cases and all. Okay? So over a given period of time, like 1 day, 1 week, 10 days, or no, under a normal market condition at defined confidence level. Okay? Let's say आपका the confidence level is, let's say the confidence level is 99%. Okay? The confidence level is 99%, and the other one is other tool is for आपका, let's say the USD INR. We are studying for the USD INR, and the current price is suppose that 85.5060. Okay? So let's say this is the rate, and for this one आपका the worst case scenario is suppose that the worst case scenario is suppose that it is 50 पैसा, ठीक है, 50 पैसा, and confidence level is 90 days and duration is suppose that 1 week, ठीक है. So 1 week we are calculating for 1 week, ठीक है. Now that means how you will interpret this particular one, okay? That means there is only 1% chance, okay? There is only 1% chance the currency pair USD INR can come down below the 85 point आपका it is let's assume it is आपका this, ठीक है, 85 or this, ठीक है. So in within next one week there is only 1% chance कि the prices of USD INR will come down below this 85 benchmark, ठीक है. So VAR is basically we have a confidence level, ठीक है, that is 99%. So that means there is only 1% probability कि the prices of USD INR will come down below this आपका worst case scenario which is आपका 50, ठीक है. So that means this is your आपका confidence level, ठीक है. The prices the confidence basically what we can say again, the chances of remaining the prices high of this USD INR is आपका like we have 99% confidence level कि the prices will remain 85 and above than that. There is only 1% probability कि this will go below this particular one. If it is let's say 95%, that means there is only 5% probability कि the prices will go below this particular one, ठीक है. So this is something which help us to manage the things कि how much risk we can have if this particular thing happen and all, or what is the overall market scenario regarding that particular security and all. So VAR like here they have given 45 paisa of USD INR, 95% confidence level implies that only 5% of chances of worsening beyond 45 paisa, ठीक है. If today price is 64, so tomorrow it is 1 day war, ठीक है, 1 day war. So the export assume 63.55, ठीक है. So 64 minus 45 आपका, and there is only 5% chances the rate will go below this particular one, and 95% probability कि the prices will remain above than that particular one. So that is VAR, ठीक है. We'll discuss case studies around this one. Again, very important concept, very important actually, two varies with this one, ठीक है. So this is very important question. आप concept आपका you will definitely see one question around the VAR, because for market risk आपका we use different VAR and all. So parametric approach, we have three approaches आपका, ठीक है. Parametric, variance, covariance, that is not part of your BFM, but if you have risk management as a your curriculum na, so then these are generally part of that particular one, ठीक है. We have one is आपका simulation based. Parametric VAR based on the sensitivity of various component, correlation approach and all, ठीक है. One other one was there, ठीक है. Variance variance approaches and all other also have given in this one, नहीं. हाँ, okay, हाँ, Monte Carlo, ठीक है. This हाँ, one is parametric approach, another one is Monte Carlo approach, ठीक है. Mostly we use this particular one, and one more आपका, ठीक है. Third one is historical data, ठीक है, historical data. But these are not in BFM. They are if you have risk management as a your curriculum ना, ठीक है, so that they are generally part of that particular one, ठीक है. Duration is basically how much time. This is something related to bonds आपका, ठीक है, bond market. So let's say we have maturity of bonds. Let's say there is a company who issue bond for 15 years. So that 15 years maturity of that particular bond. Now let's say as an investor, we as a treasury department, we purchase bond and we sell. The period we hold that particular bond, so where we can account our profitability, that period is generally known as duration. So duration is a measure widely used in investment business. Through the concept of duration is applicable to all assets and liabilities where the interest rate risk present in. To understand duration, we need to familiar with the concept of YTM or yield to maturity, right? So let's say the bond carry a coupon rate interest which is payable on 100% value of the bonds, par value basically, at the time of issue. However, the bond may be traded in discount आपका, or at premium in secondary market. Nowadays bonds get traded in secondary market, so it can be traded in at premium or आपका discount. Premium or discount is a case, like let's say if it is in case of discount, let's discount means that is less than the face value of that particular bond. Let's say face value is 1000 and it is trading at आपका 900, because why it is in discount? At the time of maturity the borrower will pay 1000, so it will eventually become 1000. That means that is at discount. So if you purchase, you will get higher value in that particular, and your current yield will be high in that particular case. Current yield is basically if you purchase a bond today that got listed 2 years ago and maturity is 10 years, and if you hold that bond till maturity, means the remaining 8 years, if you hold that particular one, what rate of return you will get from that particular one, that is called current yield. Okay? So depending on the interest rate, trade markets, the trade price based on the market rate or interest for residual period of the bond is constantly changing in the market rate itself. This slide, one slide is missing here. Duration is simply saying, let's say the maturity period is 15 years. As I gave you an example, as a treasury, let's say we hold a bond for 2 years, we buy and we sell. This period is generally आपका duration. But how we calculate this particular one? How we basically we have as a treasury, most of the time our investment are in short term. Treasury investment are mostly in short term period. So sometimes what we generally do, we generally do the calculation how long we have to hold this particular asset or security so we can generate some sort of profitability. After that we'll be having some profit outcomes and all. So that is something related to this particular one. Derivatives आपका ठीक है. So derivatives they generally use for the hedging purpose. Mostly the initial idea behind the derivative was hedging, but nowadays they generally get used for the your speculation purpose also. There are a number of people who generally trade in derivatives, especially in case of future and options. ठीक है. So people they enter like if they have some sort of speculations around the price movements and all, accordingly they make their position. But the original thought around the derivative was hedging to minimize your risk, right? So especially these आपका OTC derivatives ना, over the counter derivatives, they generally get used for the hedging purpose only, right? So like Forex, the exporters, importers, they generally enter into contract so they can fix a price in the market itself. But exchange traded derivatives, they are majorly used for the speculation purpose, where investors or traders they generally make their position as per their expectations. Because again derivative are highly leveraged funds. You do not have to pay the entire value of the contract. You just have to pay an initial amount which is called margin, and that is very less. Let's say it is max to max 10%. That means by like with 1 lakh rupees you can enter into a contract of 10 lakh rupees, or by with 10 lakh rupees you can enter into a contract of आपका 1 crores, or with 1 crore you can enter into a contract of 10 crores. So that is the one. So that is the leverage which we generally get from this particular market. So basically if it comes to the treasury and uses of derivative by treasury, they generally use for both the purposes. Major purpose is hedging still, but sometimes they also enter into kind of speculative areas also, because for the speculation purpose also. Derivatives next unit आपका, ठीक है. Now for this one I have done one session. It is for around 1 hour 40 minutes. If you did not get that particular one, please do share with me, ठीक है? Because if I'll explain all these particular one, it will take at least 1 hour, ठीक है, for the derivative things. So that's why I have already done one session. Please do watch that particular one, ठीक है. It is I guess if you'll watch your for this one, you can what you can do, just watch the BFM restart series unit number 24, the concept part itself. Okay? So unit number 24 I have provided in sequence itself, so please do watch that particular one. And if you get any confusion, please do let me know. There are some numericals like premium calculation for call option and put option, ठीक है, forward rate pricing आपका, ठीक है, but not that black call models and all, they are not part of this one. But हाँ, the payoff for your future or options आपका, that is important. So you can go through those particular one. I have tried to explain you in that particular session in detail with like 1 hour 45 minutes for concept class. That means we have discussed all these particular one in detail. So please do watch that one. And if you face any issue, now just do share with me. Okay? There are some areas which is kind of a concept or fundamental parts which I have kept here also, so you can revise. Okay? OTC आपका and versus exchange traded derivative. If you will watch that particular video now, I can guarantee you will not face any issue around these particular one. Okay? So we have four type of derivatives. Derivatives are financial instruments whose value is derived and dependent upon on underlying asset. I hope everybody understand this particular definition. That means like underlying asset can be it could be आपका stocks, commodity, indices, currencies and all. Okay. So basically like what we are doing, like we use different models. This topic is that much great ki people they get Nobel Prize in economics for the derivatives. Again, I hope you know the Black and Scholes models. That was the model with that they get the Nobel Prize for the derivative calculations. Only we use that particular one. Okay? So it is something that the value of the derivative is generally derived or dependent upon an underlying asset. That means, like let's say we use one simple formula called SCRT. Okay? SCRT. Okay? So S is आपका spot price. Let's say for gold, the spot price is supposed at 80,000. Okay? Spot rate आपका spot rate. Okay? Now the value what we are doing, let's say if you are calculating gold price for the 6-month contract. Okay? So E is exponential value 2.71828. Okay? R is आपका the written, which is let's say it is आपका 10%. T is time duration. T is let's say 6 months. So what is happening here? Everything is based on this underlying asset, which is the current market price of that particular one. Let's say gold per 10 gram is supposed at 80,000 rupees in the market or 1 lakh rupees in the market. So if this price will go up, obviously, let's say after this calculation, we reach to 92,000 for 6 months. So 6-month contract for gold is spot rate is आपका 86,000. 6 months later आपका it is showing 92,000. Now there will be some change in this value. If this will go up 80 to 90, obviously this will also increase. If this will come down, this price will also come down. So that's why we used to say, or every book or every definition wherever you'll search, you'll see the same definition. Ki, derivatives are financial instruments whose value is derived and or dependent upon an underlying asset, right? OTC, we have four type of derivatives: future, forward, option, swap. Forward and swaps are OTC contract, and future and options are exchange. Exchange traded means they generally get traded in the recognized stock exchanges, right? So that means they are standardized product. Everything is get decided by the exchange except their prices. Prices are generally market driven, demand and supply. But in case of OTC product, they are private contract. Parties of those particular contract, they can customize according to their need and according to their requirement. Contract means like settlement date. In case of exchange traded, it is like for the equity derivatives, we have last Thursday of every month. Their lot size or their tick size, everything is decided by exchange. But here it is by the involving parties. Those parties who involve in this one. Similarly, forward versus options is there. If you build your understanding around the exchange versus OTC, this will automatically get covered, right? So please go through these particular one. I have given you the references for that particular one. So please do use that one. Okay? So that is kind of a homework additional. Okay? Next one aapka, which is unit number 25. I guess this is the last unit from your module C itself. Okay? Which is treasury and asset liability management. So basically the ALM aapka, this is the previous one was something around the risk management and all. Okay? So this is आपका treasury and ALM, asset liability management. We do have this gap between asset and liabilities, and that gap is generally fulfilled by the treasury department. Sometimes this gap shows some sort of surplus, sometimes there is some sort of deficit. If we have surplus, so treasury will use that money, invest in some other market or some markets from where we can generate some sort of profit for the bank. And if there is a deficit, so they'll arrange that money and they'll fill that particular deficit itself. So that generally comes under this one. Okay? So you can see managing ALM, liquidity risk and interest rate risk, role of treasury in this, uses of derivative again, ठीक है, credit risk and derivatives, transfer pricing and this policy environment ना, this is very very important one, हाँ, policy environment वाला part, this get asked so many times. So the risk arise out of mismatch of asset and liabilities of bank, and asset liability management is managing such as balance sheet risk and all. The risk is not controlled may result in negative spread or erosion of net worth. ALM therefore defined as protection of net worth for the bank. Asset liability, the basic one. Liquidity risk, आपका what is liquidity risk? We have discussed one entire unit around this particular one, right? I hope you guys remember module B, your liquidity risk and Basel norms. Okay, so what is liquidity risk? We all know. So let's just have a reading around this particular one here. Another one, guys. So here it is given also, the ALM and uses. Nothing new. Okay. Interest rate risk also, we have discussed one. Okay. NII, like inflow minus outflow, NII. NIM is your aapka NII divided by average asset. Okay. So that is defined here. So the gap is like, let's say your payables, receivables, and if there is any gap, so that gap generally get managed by your treasury management. Next one आपका experiences of ALM in Indian scenario, similar one. Explain Indian scenario. You can just read out this one, guys. इसमें ज़्यादा tension नहीं आएगा. Treasury and ALM, uses of derivatives, entire unit. If you'll go through that topic na, unit 24, आपका restart series, you won't face any issue around credit derivatives or the other form आपका swap and all. ठीक है. The eligible entities in market makers and user category are under credit derivatives. This is for the credit derivative. Market makers and users team. This we have discussed somewhere else also. I hope you remember. Credit derivatives, transfer pricing, policy environment. Please do remember, do go through this. ठीक है, यहाँ पे कुछ है नहीं. ठीक है, this is very basic one. ठीक है, but this part is ना that get tested so many times. ठीक है, तो please उसको ध्यान रखिएगा. ठीक है. So policy environment is something while we are framing any policy around the ALM things. So we are using different products and all. So managing those particular product guidelines toward those particular products and all, that is very important. ALM will be affected only if there is a strong policy foundation. Though in general we describe the ALM policy this. So what an integrated risk management policy bearing upon the market risk of the bank should ideally have the following areas. One is ALM policy, which prescribe the composition of asset liability management committee (ALCO). Liquidity policy prescribe the minimum liquidity to be maintained, funding of reserve asset, limited on limit on exposure to money market, contingent fundings and all. Then we have derivative policies and others. Derivative policy C. So derivative policy which prescribe for the uses of derivative, capital allocation, restrictions on derivative tradings, valuation norm. Investment policy prescribe the permissible investment norms while you protecting your ALM. Composite risk policy for foreign exchange and treasury. We have transfer pricing policy, prescribe the methodology spread to be retained by the this. Very easy one. But this get asked so many times, so please do pay your attention. And this is all about your module C, a quick summary. Okay? So I have tried to cover the maximum or the most important areas from this particular one. Now from tomorrow onwards, we will be doing the live session. We'll be doing for case studies and your application based question and all. Module D, I'll be providing one recording, so you can watch that particular one. That will be in English medium, but if you are comfortable in Hindi language and all, so you can go with the existing restart series or the compilation one also. Okay? So from tomorrow onwards, sessions are very important, as we have done with the module A, all the 10 units, unit wise aapka discussion. So similarly, we'll do for the module B, then C and then D also. Okay? And I'll be providing you mock test aapka, with the exam level questions and all. Okay? So you can go, I'll be providing two set of mock tests. One is basic level आपका, so you can build the basic concept and you can brush up your knowledge and all. Again, that I'll try कि I'll be creating that particular in tomorrow afternoon itself. But that exam level वाला, that will be live just after the tomorrow's session and all. ठीक है दोस्तों? Any question आपका? Right, and if you are having any doubt, if you need any help from my side, still we have time for 5 to 6 days. Please do reach me out again, just and I'll try my best to help you out with those particular things. Do attempt mock, reattempt, and go through the important concept areas and all. So just make sure ki you are able to score 60-65 in this particular paper. I'm not saying ki go for the most difficult things where you are taking 2 hours 3 hours to understand one concept for 2 marks, rather than go for the other topics where you can score well. Okay? So you sometime, like if you want to build some sort of expertise in the subject, obviously this subject need 3 months आपका downside. Okay? But if you want to crack this examination, where I can help you, because we do not have 3 months आपका to go through the entire things and all. But if you just want to crack this examination, you want to score 55-60 and all, that is manageable. And we have done that particular in past also so many times. So that is doable. So you can stick to those particular areas. All right. Chalo. So this is it from my side, guys. I'll see you tomorrow at 10 p.m. 10 p.m. sharp 10 p.m. And we will be starting with the module B marathon session. Okay? All the, we'll try to cover the maximum unit. Basically what we are doing unit wise. I'll not confuse you with the different mixed match of question and all, because sometimes what happen na, if I'll come up with the mixed match question, so you will not feel confident. If you'll go with the sequence wise, topic wise, like every topic, as we have done for the module A, all the 10 units. Okay, now module B, unit wise sequences practices, so that gives some sort of confidence and you'll feel something like you have done with this particular topic and all. So accordingly, that confidence will help you in examination also. All right, so this is it from my side, guys. I'll share this particular PDF, I'll upload this particular PDF, you can go through, and I have already shared the detailed version yesterday itself. Somebody asked me, those who have gone through the module B, that is not in white background, so, but you can go with that particular one also if you want more detailed things and all. And I'll see you tomorrow. So till that time, bye bye, take care all, good night. Thank you, guys. Thank you.